Welcome back to the Inner Circle Show. In today's episode, Tesla deliveries and Tesla energy. Wow, we need to speak about that, and funds are buying up Palantir shares. But before we get into all of that, don't forget to give this video a like, subscribe to the channel, and turn your notifications on so you do not miss an upload Monday through Friday. Yesterday, Tesla posted their Q2 delivery results, and I think a lot of people were actually pretty surprised. Many people coming into this really thought that the results weren't going to be all that good. The numbers were going to be maybe a little bit below estimations. And, maybe according to Dan Ives and others, it would mark the end of a bad period of time and we would then move into a period of recovery. But what I want to say is that actually the numbers came out, they surprised a lot of people, and they were actually quite great. They beat estimates. In the second quarter, we produced approximately 411,000 vehicles and delivered approximately 444,000 vehicles. We deployed 9.4 kilowatt hours of energy storage products in Q2, the highest quarterly deployment yet. So you can see here that this is broken down into particular models. So in terms of Model 3 and Model Y, of course, Model Y being their most popular vehicle, globally the most popular vehicle, EV or non-EV, very, very impressive vehicle indeed. Production-wise, they hit 386,576 vehicles, that's Model Y and Model 3. Deliveries came in at 422,405, and then you can see the subject to operating lease accounting here as well. And other models were a lot less than those two models, as always expected, but you can see those numbers here and then the total, which we've just mentioned as well. You might be wondering about the difference between the delivery numbers and the production numbers, why there is a higher number of deliveries compared to production, and that can just be attributed to the selling of vehicles produced in previous quarters, and that just indicates that they are doing a big drawdown on inventory. Drawing down inventory is usually a pretty good sign because it's indicating strong demand for their products. And by reducing inventory, Tesla is effectively converting previously produced vehicles into sales, which then obviously reduces storage costs that are associated with that and also does help improve their cash flow. And we like to see a nice balance because you don't want a company to have too much in their inventory and then they're having to, they're not selling that, there's lack of demand, they're having to pay for storage costs, blah, blah, blah. And you also don't want to see it where they've got no inventory and then there's a sudden demand and the supply can't meet it. So I think this does show us that they are effectively managing their production and their supply and demand. So just to round up the delivery numbers before we talk about energy in a little bit more detail, these were good numbers. I think a lot of people were expecting a lot worse. I think that this does really mark a period of recovery that we are now going to see. We've already seen the stock starting to recover and then some. I think yesterday it went up by like 10% in one day, which it hasn't done for quite a while. It was very nice to see in my portfolio, although I would welcome, lower prices for a while whilst I still accumulate, but we are really starting to see this shift happen. And it's not going to be the case in months and years to come that we care so much about EV delivery numbers because like I keep saying, we're moving away from that. We're moving into revenue coming from SaaS, like SaaS margin revenues. We're going to care more about FSD licensing, more about services. We're going to care more about the robotaxi fleet and Optimus. So they said in their announcement, we deployed 9.4 kilowatt hours of energy storage products in Q2. The highest quarterly deployment yet. And when you look at a graph showing how Tesla's energy deployments are going up over time, it's pretty impressive. And remember, right now, the energy segment, the energy portion of Tesla is their highest margin business. So for the highest margin business to be accelerating in growth and doing really, really well, now hitting the highest quarterly deployment to date, that's impressive. And that will show up in the numbers, in the earnings, and also in the stock. And I don't always cover every single contract that Tesla Energy get for megapacks or whatever globally because they're not always that interesting. But yesterday I did cover quite a big one in New Zealand, and that was for like 163 million New Zealand dollars. So these contracts are popping up. They're popping up globally. I've heard about some in the UK, in Australia, in New Zealand, in the States. It's really, really happening. But when you look at the quarter over quarter growth in the energy deployments, Q2 was more than double Q1. That is quite insane growth, really, and especially if we see that continue. Stephen Mark Ryan, who I'm sure you know as Solving the Money Problem on YouTube, posted this on X. Tesla delivers a few more vehicles than expected, plus 9%. Tesla on the cusp of autonomy, minus 50% from all-time highs, minus 8% year to date. Short-term, short-sighted nature of investors in a nutshell. Can't wait to see what happens when people figure out robotaxis are happening and the implications. He's absolutely spot on there. We have some short-term news about deliveries that aren't even going to matter in the future all that much. Stock goes crazy. Stock goes wild. Tesla on the cusp of autonomy, FSD, robotaxi, autonomy, Optimus, all of these big things, energy growing rapidly. People don't care all that much because the stock is still down from all-time highs by, he's saying there, 50%. But I do think this will change. I do think people will wake up and figure this out, but hopefully not before myself and you guys buy more shares. But Elon then responded to this and said, yeah, this is small relative to vehicle autonomy and Optimus. So as I keep saying, the shift is happening. I'm not going to say any more on that. But of course, the mass media was always going to come out in force and report some untrue things about these deliveries. Of course they were. We always expect that. Take a look at this. We had this from the Financial Times saying Tesla deliveries fall 5% in second straight decline. Elon Musk's electric vehicle group, it's a weird way to say it, faces slowing demand for battery-run vehicles but beat Chinese rival BYD. Not really telling us the whole truth there. And if you didn't really know about Tesla in detail and you weren't following these numbers exactly, you would just see that and you might think it's all over, there is no demand. But that wasn't the only one. We then also had this one that says Tesla posts disappointing production and sales numbers for Q2 2024. Sales fell by 5% with production cut by more. It's always really interesting to see which part of a story the mass media pick out and make a bigger deal than maybe it should be, and what parts of maybe the good parts of a story that the mass media purposely leave out and do not focus on. But do let me know what you thought about the delivery numbers. I am most excited, obviously, about energy. I like to see that they're doing well on their EV sales, of course, as well. But let me know what you thought about this in the comments below. There's not too much to report in the world of Palantir at the moment as far as new information goes. You know, this is quite unusual. Normally we have contracts coming up every other day, information to report, but it's a little bit quiet on the Palantir front at the moment. However, we do have some information that Cathie Wood from ARK Invest has been buying up shares. She's been buying shares specifically in her ARK-Q fund. Now, ARK-Q is an actively managed ETF that seeks long-term growth of capital by investing under normal circumstances, primarily in domestic and foreign equity securities of autonomous technology and robotic companies that are relevant to the fund's investment theme of disruptive innovation. So they try and put companies inside this fund that are focused on or expected to substantially benefit from the development of new products or services, technological improvements and advancements in scientific research related to energy, automation, manufacturing, materials, AI and transportation. And you can see here some things that might fit into this. I believe she purchased just under 200,000 shares of Palantir just the other day, but this still doesn't put Palantir in the top 10 holdings within this fund. You can see the top 10 stocks that are in the ARK-Q fund, with Tesla being the number one by weight. Alongside buying Palantir, she has also been selling Tesla from one of her other funds, I believe, but I don't think that we should read too much into this. I don't think that they are saying Tesla's going to go down or they're now not optimistic or bullish about this position. This just seems to be a case of natural rebalancing, taking some profit off after, we've had a little bit of a run up in Tesla. Of course, I think they try to keep each position no more than about 10%. At the moment, Tesla in some of their funds is over that. I'm not saying they have to keep it at exactly 10, but if it grows too much too quickly, they will definitely rebalance. A normal behavior. I still think they're, one of the companies they're the most bullish on is definitely Tesla. Do let me know if you hold any of those companies that are in the ARK-Q top 10 holdings. Personally, for me, it is only Tesla. In other news, I saw something quite interesting on X I just wanted to briefly tell you about and get your opinion on as well. So I saw this, and this is showing us the most held assets by hedge funds. And what you can see is that the most common stock in across the hedge funds is Microsoft. And the share of hedge funds holding this stock is actually 44%. In second place is Amazon at 42%. Third is Alphabet at 38%. Then we've got Apple, Meta, Nvidia, Alphabet, Visa, JP Morgan, Chase & Co., Berkshire Hathaway, MasterCard, United Health Group, Johnson & Johnson, ExxonMobil, and Eli Lilly. Now, this didn't really surprise me in terms of the top 3 holdings or the top 5 holdings, I guess, but I did think that maybe Nvidia would be a little bit higher up. And I suppose also I'm kind of surprised, kind of not, that Tesla isn't even in the top 15. I also talk about Palantir a lot on this channel, and Palantir do not feature in this either, but I'm not surprised about that because it's still very early for Palantir. They're not even yet included in the S&P 500 index. So I wouldn't expect hedge funds to be having large amounts of shares in Palantir at this point in time, but they are definitely increasing their exposure to Palantir. But let me know what you think about this. Are you surprised by the top holdings, or actually is this quite expected? On the screen now are the topics we will talk about exclusively on the Vault this week. And if you're a Vault member, I'm going to continue this episode and talk a little bit more about Tesla today. If you're not a Vault member, thank you so much for watching this episode, and I'll see you in tomorrow's. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.